Is there any point in trying to guess when Bitcoin's market cap will flip gold?
I assume 2 to 3 cycles. I just think it's mostly time. I think you can make rough estimates based on what, map out 2 or 3 cycles and give a rough multiple for what kind of cycle would have to look like. And you can get kind of a framework for how that becomes realistically possible. Liquidity feeds on liquidity, right? So the more liquid Bitcoin gets, in some ways, the more attractive it gets. Basically,
Hmm.
you can't attract $1 trillion pool of capital until you have a lot of $1 billion pool of capital on board. And so I think Bitcoin's kind of going through that process.
Lyn Alden, a distinguished macro analyst, investment strategist, and devoted advocate for Bitcoin, is recognized for her cautious approach to making short-term price predictions. Despite being one of the industry's foremost analysts, Alden rarely ventures into specific forecasts for Bitcoin's immediate trajectory. Her steadfast conviction lies in the belief that Bitcoin is not only destined to endure but will also outperform and ultimately replace the inherently flawed fiat-based global monetary system. However, in a recent conversation with Luke BRS, Alden shared a notably bullish outlook on Bitcoin's potential to surpass gold's market cap. According to her assessment, this transformative event could transpire within the next 2 or 3 cycles. Alden envisions Bitcoin reaching an approximate value of $600,000 per coin to achieve this flip, taking into account the entire 21 million supply, a milestone that won't be reached for another 117 years. This prediction gains added significance upon closer scrutiny, given the protracted timeframe for the full Bitcoin supply to be mined. Looking ahead, Alden anticipates more than just a shift in market cap dominance. She envisions a substantial transformation where Bitcoin not only flips gold but also replaces or significantly influences a significant portion of the global monetary system. This forward-looking perspective becomes increasingly pertinent as the global debt problem intensifies over the next decade. In the near term, Alden also predicts a substantial influx of new capital in 2024, especially following the anticipated approval of a spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission. She believes this regulatory milestone will have a profound impact on Bitcoin prices, surpassing expectations in terms of upward movement.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So for any asset, and the more kind of tightly held the asset, the bigger the effect is. But for any asset, if $1 billion wants to flow into Apple stock, for example, just right away, that'll increase the market cap by more than $1 billion because price is set on the margin, right? So an example I use is if you have a neighborhood street with like 20 homes on it, and one of those homes used to be worth 500,000 but recently sold for 600,000, all of those other homes basically reprice upward by 20%. And so only $600,000 traded hands, but this entire street of 20 times 600, thousand dollars, it just increased by what's that, $100,000 per home. So that's $2 million. Just because $600,000 traded hands, and really only the marginal increase was $100,000 for one home, right? And so $100,000 had a 20-fold increase and moved the overall kind of market value of that street by 2 million. And so the same's true for Bitcoin, the same's true for stock. Basically if $1 billion wants to flow into Bitcoin, we'll probably see a $10 billion market cap increase or maybe more. Um, the recent price surge we saw from say 25,000 to 35,000, however many $100 billion that was in market cap, it's not because $100 billion flew into it. It's because a handful of billions flew into it, and then 70% of the supply has not moved on chain in a year. And so around the margins, that boosted the market cap. Now that also can affect on the downside as well. If things are in a bubble and $1 billion wants to fly out, that can drop the market cap by 80 billion. And so over the course of time, that settles towards basically whatever percent of net worth people feel comfortable holding in Bitcoin compared to other assets. The same is true for any other major asset like Apple stock or their homes and things like that. But in any sort of like major change, you can get those bigger upturns and drawdowns compared to how much capital is actually changing hands. And Bitcoin goes through these hodl cycles. And so when it's in a bear market, it tends to move towards the liquid hands. And when it's in a raging bull market, some of those illiquid hands eventually do sell. If they're up 5x or 10x, they cash out 20% of their holdings and they go buy a house, for example, or they rebalance into whatever they want, and new buyers are coming in, and eventually they exhaust, kind of the situation. To some extent, I think the supply reduction from exchanges is overstated. It's a good narrative, and around the margins it's true, but some of that has just been reclassified. So, for example, if money moves from like Coinbase Exchange to Coinbase custody, it's still in Coinbase, right? It's just it changed the type of money that it is. Similarly, some of that in recent years, like money went into wrapped Bitcoin on Ethereum. And we can kind of classify that as a whole nother exchange. That's just like the Ethereum environment is like another exchange. And so if some Bitcoin went out of centralized exchanges and towards pseudo centralized exchanges on Ethereum, that's still a type of exchange, right? It's basically this like pool of capital is meant for trading around. And so when you adjust for a couple of things like that, it's less significant than some of the charts would imply. But it still is the case that because of the hodl cycle, during this bear market in particular, more and more coins, went from fast money participants to liquid strong hand participants. And it will take a pretty significant price increase to get most of them to part with any of their coins.
Similar to every crypto winter witnessed in the past, the last 2 years have proven to be challenging and unforgiving for investors who tend to obsess over price fluctuations. This period encompassed significant price drops, market collapses, and the recurring mainstream narrative proclaiming the demise of the cryptocurrency space. Compounding these challenges were macroeconomic and geopolitical uncertainties. It is reasonable to assume that, at this juncture, most weak-handed investors have exited the market, leaving a predominantly resilient community of serious hodlers. This assumption finds support in the decreasing number of cryptocurrencies currently held on exchanges, indicating a tightening supply as we approach 2024. Returning to the interview, Alden continues to share her perspective on the ongoing evolution of Bitcoin and her insights into the future trajectory of the industry.
So I think the general trend is going to be persistent. Basically, the problem. So when you adopt most technologies, you never de-adopt the technology. You never get the smartphone or electrification of the radio and then go back to not having them unless you got poor. Like unless something bad happens, you don't de-adopt. Whereas with Bitcoin, adoption means price increases, but this means leverage, which means people get over the skis and blow up. And then people that bought what they do not understand, some percentage of them will de-adopt it. They'll sell at the lows. They'll be like, I made a mistake. I bought into a Ponzi, whatever the case may be, they get out. That's hard to avoid. That's why a monetary technology is likely to inherently take longer than a non-monetary technology to adopt. It's not a 10-year thing. It's like a 30-year thing, whatever the number is. It's a multi-decades thing instead of a multi-year thing. Which judging, and that's demonstrated by the fact that we're 15 years in, and there's still a long way to go. This is like the internet. This is like the Industrial Revolution. It's not like one thing like a smartphone. It's a whole suite of just overhauling an entire system and putting in a whole other system. Now, that doesn't mean that every cycle necessarily has to have diminishing returns compared to the prior one. Maybe the last cycle was unusually weak for a number of reasons. And maybe the next cycle is bigger, for example. The law of large numbers means we're probably not going to have those initial cycles ever again, where you have, you go up like 1,000-fold or 50-fold in a couple of years, right? I mean, those types of crazy cycles are probably behind us, at least in real terms, unless we have hyperinflation of the dollar itself, like the unit of account we're counting in. But in terms of real terms, it's easy to go from 1,000 people like Bitcoin to 1 million people like Bitcoin versus 1 million people like Bitcoin to 1 billion people like Bitcoin to 5 billion people like Bitcoin, right? I mean, eventually you do get real diminishing returns structurally, but it doesn't mean that every cycle has to be smaller than the one before. You could surprise to the upside in one cycle, and then but I think that there's some cyclical aspect inherently there, because whenever it goes up too smoothly, it's going to build up leverage and people are going to get wrecked, and it's going to have a consolidation.
Meanwhile, Vanik, a New York City-based asset manager, has released its projections for Bitcoin and the broader cryptocurrency market in 2024. Analysts at the firm anticipate a substantial inflow of $2.4 billion in Bitcoin exchange-traded funds. To arrive at this figure, the analysts conducted a comparative analysis of the Spire Gold Shares ETF, adjusting it to $223 within the initial days of its launch. Notably, the GLD ETF observed approximately $1 billion in inflows during its early stages. Applying these observed patterns to the Bitcoin spot market, the analysts forecast an inflow of $2.4 billion in the first quarter of 2024. Beyond the initial 3 months, they also project a medium-term estimate of $40 billion in inflows over the first 2 years of trading. What are your reflections on these projections? Your insights on whether the numbers could trend higher or lower would be appreciated. Please share your thoughts and comments on Lyn Alden's video in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.